This week, Bitcoin fell below $33,000 for the first time in about a year. Ethereum and Cardano also fell, making it look like the crypto market is crashing or at least going through a major correction. Based on the old investment saying by the dip, investors may be looking to get into the volatile cryptocurrency market in the hopes that this is just a short-term dip and not the start of a long-term bear market. If you think now is a good time to buy, here are some historical trends, opinions from experts, and buying tips for people who are new to cryptocurrency. Significant losses. BTC is worth about $30,754 today, which is more than 20% less than it was a month ago. It was sold for as much as $69,000 in November 2021. A drop of more than 50% is a sign of big losses. Over the past month, ETH lost about as much as Bitcoin, dropping to around $2,000, while Cardano lost even more, dropping by almost a third, 32%, to 57 cents. Even though this isn't as bad as the crash in 2018 when Bitcoin lost 80% of its value, experts say things could still get worse for people who still have BTC. Because of these kinds of losses, the Reserve Bank of India, RBI, which is in charge of India's finances, has warned crypto investors many times. It says that people should be ready to lose everything they invest because there are no guarantees of returns. Inflation, downturn, and war. Kanika Agarwal, co-founder of the India-based portfolio management services company Upside AI, thinks that the crash of cryptocurrencies has been like the drop of tech stocks. A big reason for this is that crypto has become more popular, and people who buy and sell it treat it like any other speculative investment. So, it's going down just like other growth stocks. She thinks that people who don't have any cryptocurrency yet should buy some slowly now. As for whether this drop is the start of a long-term trend or just a temporary hiccup, Nishchal Shetty, co-founder of India-based crypto exchange platform WazirX, says that while macroeconomic changes have caused a big drop in cryptocurrency prices, it's worth noting that both the crypto and regular financial markets are going through a correction, which shows that the crypto markets are growing up. Is buy the dip a good strategy? The idea of buying on the dip is based on the idea that price drops are short-term problems that get fixed over time. Dip buyers hope to take advantage of price drops by buying at a discount and making money when prices go back up. Crypto markets are unstable, so it's risky to buy cryptocurrencies at any price, let alone a dip that could turn into a long-term trend. Prices could go back to where they were, but they could also go down even more, leaving your investment in the red. If the past is any indication, the current drop, or crash, depending on your point of view, could bounce back like it did last year, when prices dropped to similar levels before going back up to where they were before the drop and even reaching their peak in the fall. But it's possible that they won't. So far, the prices of Bitcoin have shown a certain amount of seasonality. They seem to go down in the spring and then go back up in early summer. But the past performance of any kind of investment, let alone the unpredictable world of cryptocurrencies, is no guarantee of future performance. The founder and CEO of Belfrix Group, Praveen Kumar, thinks that these prices are great starting points for investors to start building a strong portfolio of cryptocurrencies. In fact, investors should continue to buy the dips in the price of well-known cryptocurrencies like Bitcoin, Ethereum, Litecoin, etc., because their long-term fundamentals are still pretty strong. Dilip Sainberg, the founder and CEO of MuffinPay, doesn't agree. Regulations will raise the value of good crypto projects with a lot of potential. We have to wait a few months, though. The drop has always been good for people who invest in crypto. But this time, you need to HODL for a long time to see the benefit, says Sainberg. That's it for today, guys. See you in next one.